Trading Forex with Confluence. Combining multiple analysis techniques. Introduction. Trading Forex with Confluence involves the integration of multiple analysis techniques to gain a comprehensive view of the market. Rather than relying on a single approach, traders use a combination of technical analysis, fundamental analysis, and market sentiment analysis to make well-informed trading decisions. By harnessing the power of Confluence, traders can increase the accuracy of their trades and enhance their overall trading success. In this text, we will explore the concept of trading with Confluence and how to effectively combine various analysis techniques. Understanding Confluence. Confluence in Forex trading refers to the coming together of multiple analysis techniques confirming the same trading signal or direction. When different analysis tools point towards the same conclusion, it strengthens the trade's potential and reduces the likelihood of false signals. Confluence creates a higher probability trading scenario. Technical analysis. Chart patterns. Identify common chart patterns such as head and shoulders, double tops and bottoms, triangles, and flags. When these patterns align with other technical indicators, it enhances the trade's validity. Support and resistance. Plot key support and resistance levels on the price chart. When these levels coincide with other technical signals, such as Fibonacci retracement levels or moving averages, they become significant areas for potential trade setups. Fibonacci retracement and extensions. Use Fibonacci levels to identify potential price reversals and extensions. When Fibonacci levels align with other technical tools, it strengthens the trade's confluence. Trendlines. Draw trend lines to identify the direction of the prevailing trend. When other technical indicators confirm the trend direction, it provides more confidence in the trade's success. Fundamental analysis. Economic calendar. Stay informed about major economic events and news releases that could impact the Forex market. Combine fundamental analysis with technical analysis to anticipate market reactions. Interest rates and central bank policies. Monitor changes in interest rates and central bank policies of the currencies being traded. These factors can influence currency valuations and provide confluence with technical setups. Geopolitical events. Be aware of geopolitical events that can affect market sentiment and currency values. Combining fundamental analysis with technical setups can help traders identify high-impact trading opportunities. Market sentiment analysis. Sentiment indicators. Use sentiment indicators such as the Fear and Greed Index or market sentiment surveys to gauge the overall mood of the market. Aligning market sentiment with technical and fundamental analysis can provide valuable insights for trading decisions. Commitment of Traders, COT report. Analyze the COT report to understand the positions of institutional traders. When COT data aligns with technical setups, it adds to the confluence. Trade execution. Entry points. Look for entry points where multiple analysis techniques align. For example, a confluence of a bullish chart pattern, support level, and positive market sentiment may signal a strong buying opportunity. Stop-loss placement. Determine stop-loss levels based on key technical levels or market volatility indicators like average true range, ATR. This helps protect against adverse price movements and minimizes potential losses. Take profit targets. Set take profit levels based on significant technical levels such as resistance levels or Fibonacci extensions. This allows traders to secure profits at strategic points in the market. Risk management. Always implement proper risk management techniques such as position sizing and risk-to-reward ratios when trading with Confluence. This ensures that potential losses are controlled and trades are aligned with the overall trading plan. Conclusion. Trading Forex with Confluence involves integrating multiple analysis techniques, including technical analysis, fundamental analysis, and market sentiment analysis. By combining these approaches, traders can identify high-probability trading opportunities and reduce the risk of false signals. Utilizing chart patterns, support and resistance levels, Fibonacci tools, trend lines, economic calendar events, interest rates, central bank policies, geopolitical events, sentiment indicators, and COT data, traders can gain a comprehensive view of the market and make well-informed trading decisions. Implementing effective trade execution and risk management techniques ensures that trades are aligned with the overall trading plan and contribute to long-term trading success. Trading with Confluence enhances traders' confidence, leading to more accurate and profitable trades in the dynamic and challenging Forex market.